It's fun to stay at the U
S-A?
S
Woo!
S. There we go. A.
Too many A's, too many U's, too many. What is it? Where's my
There were
paper
some weird
football?
looking
Give me the
letters
paper
there. Yes,
football.
it was.
Help me out
You just
here.
don't want to. You do not want to see the A that Josh had starting when we were practicing. All right, please don't do it again.
Yo,
I mean, a lot of people would get it.
this is. He doesn't have to take this. He's going home.
Right.
All right, let's get going. Let's get going. We are so busy here that Royce has to go make some more money here, so we got to get moving here. We really are, by the way. So hopefully you guys will hear the news about that soon enough. But I'm Darin with Arbitrage Trade. This is After the Bell, and it is Wednesday. My guests are Daniel Hopwood, top right-hand corner. We've got Josh Morgan, bottom left, and we have Royce, the CEO, founder, the genius behind the algos in the bottom right. So
That's a strong
let's get.
word. I don't know about that.
Yeah.
No, you got
two
stats.
times a day. Remember that.
You have stats to prove your genius, but we won't get into that because you're too humble for that. All right, so let's go to the market. So the market's pretty much what did I say today? Because we never can look at Daniel's because he's a little behind. So let's go straight to mine. Dow basically was flat. S&P was 0.5, basically 1%, and Nasdaq was up 8%. That seems very algorithmic. And then the dollar is at 96.45, which is a little bit up. Crude oil, or West Texas oil, is up to 67.43, which is still very low. We got gold at 33.66, and Bitcoin is rising, and it's trying to hit that 110 again, and it's 109.264. So we are going to try, and I guess I'm going to let him say it. Say your little word there, Daniel. We'll move on. What's your little phrase? Go ahead.
We're so back.
Oh, that was so subtle the way you said that.
I guess I didn't want to poop on your parade since you won again this week, Darin. But
yeah,
you're telling everybody already.
Say phenomena,
that was definitely some 5 a.m. enthusiasm.
That's right.
Okay, so I apologize, but I did go to bed late the last 2 nights, so I am quite tired.
Rolling into the holiday, which you don't celebrate over there.
Setting up systems for arbitrage.
That's right. So give me your fun fact, because you love these fun facts about when this kind of thing happens, Daniel.
All right, well, so first I want to say a few things on just kind of like what's been going on in the market since the last time we talked, and I would love Josh's opinion on a few of this. So one of the big things is that if you look at the US dollar on a very long-term chart, like a monthly chart, you'll notice it's just in general, the dollar's been in a downtrend, right? Everyone kind of knows that.
Yep.
But there's this big, long support line starting from 2011 that also aligns with the 200-day moving average. And so you'll see that where the dollar is right now, it's finding a very strong support line. Right. And I believe Royce, I don't know if the viewers can see it, but we're looking at Royce's chart.
I'll pull it up. Hang on. Let me pull it up. Boom.
We are indeed looking for a bounce according to the bands as well. So, we kind of have all these things lining up for a bounce in the dollar to potentially come. Right. You never know. Anything's possible. But, you got your traditional long-term stuff, you have the magic arbitrage stuff all lining up for that bounce in the dollar. And, you've seen gold while rising, really still kind of in a consolidation pattern. Bitcoin is trying to break, but I think a big tell will be in which way this dollar moves and also how quick. So now for the parts for Josh is that, home sales and inventory don't look too good. So the facts I have are home inventory are starting to rise. It's breaking a 6-year high and a decade-long downtrend. They're also, home prices are having the worst move down since 2012. And new home sales are also breaking to the downside. Now, I recognize on this show, we say a lot of negative things, right? And we say them for a very long time. But Josh, when do we actually start worrying about any of this housing or even commercial real estate stuff that we've been talking about for a while?
Well, I mean, commercial, you're going to have to worry much more about, like, I mean, when you really start getting into like crises, yeah, I mean, price and rates and things like that are one thing, but defaults are kind of the big issue. And again, at this point, I'm getting so tired of the parallels between 2008 and 2009. And I'll give you another one here in probably about 10 or 15 minutes. But I mean, yes, we're seeing slowdown in new home sales. We're seeing a lot of numbers that are aligning almost identically with 2008. The one thing that is kind of, I don't want to say like propping up the market, but is keeping things from kind of collapsing. So I guess it is propping up the market, but is that you're kind of, because there was such an increase in interest rates, that you have a lot of home buyers that are kind of stuck. So we're not going to, you're not getting those people that are moving. So you're not getting the big inventory shifts. You're just seeing a lot of people that are selling, but most of the people, you got all the, like the boomers and everybody that bought before 2021, 2020, that missed these drastic rate increases. So you're getting a lot of people that are just kind of basically buying and holding, like they're stuck. They can't move. They can't go anywhere. So that's the one thing that's keeping us from seeing a real crash in the market, in my opinion.
All right. Anything you want to say real quick, Royce, before we move on to overall markets? Okay.
Oh, absolutely.
Do it.
So with the inventory being what inventory is and everything basically going, I think basically when I'm going to talk about something and it's going to be good, it's going to be bad, but it'll be the big beautiful bill. Have you guys actually read that guy? There is something in there that should actually help real estate. There's something basically in where we play. There's something called a sophisticated investor, and there's something called an accredited investor. Typically, to be a sophisticated investor, you have to have over $250K apart from your house. And to be an accredited investor, you have to have at least $1 million in liquid assets apart from your house, or make $200,000 a year in your household. In the big beautiful bill, they are making a path for someone who has just read up, got the certification saying, hey, I understand how all of these things work, like a Series 6, Series 7, whatever. And you can become an accredited investor because you understand the mechanics of it, which basically lowers the barriers, which then allows people who have read to be able to participate in things that they were previously not allowed past the door on. So that should allow people to be able to flip more houses, be involved in venture capital, be involved in just by saying, hey, I can go pass a test. Let me go study up on this without having, hey, you have to have at least $250K or you got to have at least $1 million here to even get invited to this party. So it should open up some avenues to people who have less and that have been left out for their protection. To be able to participate in the market, which should open up new ways for accredited investors to both invest internationally and domestically.
Here's my hot take on this for somebody that used to work in a space that you had to be an accredited investor to be a part of. I think this is gonna end horribly.
It can, but once again, education. Hey, they tell you to go get a degree. You say that?
No, for sure. I think I think you're going to hear about a lot of cases of where somebody had, say, $50,000 and they were able to invest a couple times into the random startups and it worked, right? But what I don't think you're going to hear about is like, when 2020 happened, right? Everybody was trading options on Robinhood, and you saw the amount of lost stuff that you'd see on Wall Street Bets of people being in oh, I traded $20,000 and now I'm negative $100,000. And I think that is going to be, or this is going to be another kind of version of that, because I guess these products are very complicated and they're very zero sum, especially when it comes to investing in like startups. And I don't know if a test is good enough to pass, like for someone to fully understand like the risk tolerance and how to like kind of
you have
manage
to get like a 90+ on the test, so you can't just fake it, right? And it's a very involved test.
I mean, having taken
tests, so
I mean, having taken like 4 different series exams, like I can tell you that it doesn't, at least the specific ones I took, they had almost zero to do with like actually investing, right? It's all regulatory stuff. And so it's like,
and that's why you get my book, read my book, and then follow what's in my book.
Well, yeah, I mean, you would definitely understand more about trading through reading Royce's book than you would taking a series exam. But I say that because it might tell you like how risky things are and how like, you know, deals are structured, but it's not going to, you know, give you the 20 years of experience that a multi-billion-dollar VC fund has and how they manage, you know, losses and cut losers and double down on winners. And, you know, if you only have $50,000, you can't double down on winners, right? If you have $50,000, how many at bats are you really going to get? Because a VC has, you know, 100 bets, right? And it's like with $50,000, what are you going to get? Like 3. So I don't think it's all bad, right? I do think the accredited investor thing is stupid, but I also think just like all you have to do is pass a test to do this stuff. Well, I just think it's going to hurt way more people than it'll do good. But it is one of those things also where it's like, I don't think you should have to be an accredited investor just to invest in startups. But I think it's one of those things where it's like, ooh, it's so sexy and it did so well for so long. But now the environment when it comes to these products is like changing. And so I think people, you know, the general public are going to apply an old playbook to it that no longer works, and it's going to burn a bunch of people.
It could.
Right.
It absolutely could. But it also allows basically people to get investment properties. It allows them to get 0 interest loans from banks for a year, leverage that, potentially participate in venture capitalists. And ventures like, hey, they'll give me $500K for a year. Maybe I'll put 50 here, 50 there, 50 everywhere. One of them has to hit, right?
So again, these 2008 parallels, what I'm hearing is a lot of aggressive lending to underqualified people.
Potentially, but not if they use arbitrage.
If we could just get everybody to actually listen to our educational parts of what we offer, then it would be good. I mean, no problems, right?
We should have gotten
but,
arbitrage.
I mean, like buy now, pay later. This is another buy now, pay later where people who don't know what they're doing just go for the money.
Yeah,
and,
like we even have services that help people like pay off using a HELOC. So they get a HELOC on their own home, and basically they take the money from the HELOC, put it directly on the principal of the house, pay off the house in 5 years using the HELOC as a bank account.
Yep. Collateralize your debt. That's the big thing.
Basically.
Let's go to, we're trying to move ahead here. This is halftime. So since we're at the halftime of this, we will quickly say we're halfway through the year. This first 6 months are done. We're starting the second half. And who knows what's behind door number 2?
I like door number 1 so far, though.
Yes. Why wouldn't you? Why wouldn't you?
Door number 1 has been great.
That's right. So going into the next part here, basically, it's one of my favorite things, which is what this administration was said they were going to do, and they're doing it. They're doing it in spades, is deregulation. And deregulation is the wild, wild west, and it means that we will pay for it now. I mean, we'll pay for later for what we're doing now, once again. And what do you got to say about that, Daniel? Quickly, like a couple of points to get us started on the where we might be going, what path we're going down.
Yeah, so the Fed Reserve Board greenlit a proposal to lower the enhanced supplementary ratio of banks. So essentially what that means is the amount of assets they have to hold actually on their book versus how much they say they have decreases, right? So this was something that was, I see Josh smiling, so it's, his theme is going to be, smells like 08. essentially what this means is that, when 08 happened, banks had to hold more of their assets in reserve so that they were, had more liquidity. So essentially they couldn't blow up. And now they're saying that they don't have to hold as much because the environment's, and this is Powell saying this, is that the environment's different now so that they don't have to worry about those same kind of things, which I find kind of ironic because there's this great YouTube video or Instagram video of this guy being asked, like, what's something weird that you do? And he's like, I like going to places right after a terrorist attack happens because you can get really cheap hotels and flights. And
nope, I'm out.
My parallel with this is like the time to like deregulate banks, if anything, would have been after 08 when they already had like blown up, right? It's not like when things are going well and it happened years ago. It's kind of like, oh, now we're going to be loose when, things seem like a little sketchy instead of cutting rates, which seems a bit silly to me. But so, it's supposed to help bring more liquidity to the market. I do understand why they're doing it, because banks now, because they don't have to hold as many assets on their book, they'll buy more less risky assets, which helps when the government issues treasuries, more treasuries can be bought because treasury sales have been weak. But obviously, loosening a rule that was put in place after 08 with everything we talk about seems a bit sus. So Darin, tell me how we blow up.
Well, you just did. I mean, that and everything else is going on, the buy now, pay later. It's just whenever it comes to roost. I mean, that's when everything has to blow up. And I've already said that it's when the elite start battling the elite. When the elite say, wait a minute, I gave you all this money and I want it now. I need it now. What's that?
So why does it have to blow up? I mean, the way I see it, I'm not saying I'm right. I'm just saying, but this is the way I see it. By them deregulating the banks, that's allowing the banks to dip their toes in the cryptocurrency, which means they find other avenues to invest in, which means they can potentially ride up as the cryptocurrency and the decentralization of the dollar happens. So you see it as one thing. It's like, hey, less regulation. They're like, hey, that means we can touch this now. Where previously you mentioned cryptocurrency in the bank and you have to almost duck because the officer at the door is like, get out of here.
Well, I just see it as they're not going to, let's just say, pay up on past sins now because they're not going to be dug into anymore. And B, they're going to invest in more risky stuff, because anytime that you do not regulate these guys, the greed factor just gets higher and higher and higher, and they start doing things that are more and more risky, again, like 2008. And that's why these graphs look a lot like 2008. And you know where I'm going to say the Fred reports, and they resemble the 20s, and they resemble 2008. So it's just, when does that happen? You guys, I'm starting to believe you guys on September. I mean, obviously June's over, and they were able to keep pushing it further and further, and wake me up when September ends, I guess. Josh, real quick, anything you wanted to add on there before we move on?
No, I'll save my 2008 stuff for later.
Okay, all right. Well, this ape might be with you on that one, of course.
Darin, I just got to say, I think the one thing I've somewhat changed my mind on is that I don't think the chicken comes home to roost anytime soon. Actually, I think the party's on.
We'll keep pushing it.
We're beginning a bull market with the deregulation.
Exactly. That should tell you right there.
Clarity for the audience. No matter the amount of canary in the coal mine stuff I say over the next, I don't know, however long, I don't think this market, nothing stops this train.
So we got to hear you every week say that. Great.
Pretty much, yeah.
I
know you love it.
So no more guardrails. The Wild Wild West is back. All right, let's go on to, you know what? Let's just run through down to, was that your crayons then already, Royce?
What?
Did you have any specific? We kind of ran through those different ones when he was talking about it early. Was there anything else you wanted to run through real quick on crayons just for that purpose?
Nah, we can keep
it. All right, so let's run on to, this is after the bell, but it's going to be after the bell for a certain purpose, which is the winner of 3 out of 4. Some dude here has won this. He's come back from the dead, and I also figured out that if I win out,
did he bring his choker? Or,
if I win out,
Or his heart.
if I win out,
Heart.
if I win out, I tie Josh.
Yeah,
That's not going to happen. But yeah, exactly. That's not going to happen. But I'll pull the scoreboard up real quick. You'll see that it is now 1, 2, 3, 4, 5, 6, 7. We got 10 for the apes, and we have 1, 2, 3, 4, 5, 6 for the constitutes, and with only 1, 2, 3, 4 weeks to go. So
I will say it's kind of interesting on the quant and the institutional investor side that the apes are picking the up and to the right. I'm just saying.
If you guys listened to After the Bell last week, actually the last 2 weeks, they made fun of my pick since I didn't go in the direction that they thought I should, and that's why I'm winning. So, or I have won 3 out of 4. Let's go. And I said we're going to do Zom because energy is an interesting pick right now for anything. And it's speaking of going up and to the right, this is another one that is up and to the right, just like Chevron and all these others. I do think they're going to have a pullback here eventually, but come on.
Okay.
Show us what you got there, Royce.
I got you, brother. So we're looking at Zom. This is Exxon Mobil Corporation in the New York Stock Exchange. We're seeing this guy. He on the daily time frame looks like the pink line is coming off of the danger zone, out of the deflection zone, and we might get support here because it's also above the RSI line on the arbitrage band and above that midline. So from where we are to where we're going, potentially we may see up and to the right, but how far to the right? That's a good question. This guy is all over the place with a top somewhere around, looks like about 116. If all things are equal, we got 2 or 3 people chiming in there with a low potentially maybe at 97. So if you guys are trying to figure out where to play, let's do 116 all the way down to 96. So that's about a $20 range. You got a $5 range across the board on these guys.
Okay.
So pick your poison.
All right, and we see that is the day chart. So not the shorter time. So we will meet back next Wednesday and whatever has happened then. I'm going to pick. I don't see it going up much higher. So we have 96, or we have 101 and below. Then 101 to 106, 106 to 111, and 111 to 116. See, I got it right this week. Had enough water.
Hey, learn to count.
Had enough water this week.
You can count.
We're sitting at 111. We're sitting at 111, and you know what? I'm going to take the top one. Still 111 and up.
Okay. Excellent.
And of course, I have to go with Josh, Royce, Daniel.
Dang.
I'll take right under you.
See, they're locking up the top. Notice they're locking up the top.
That's right. The apes are going up.
Teamwork. We're going to do whatever it takes to get random next season.
I see. So basically, anything above, I'll take basically that 106, I guess. 106 to 111.
That would be 101 to 106 for you.
101 to 106, whichever one. Yeah.
Then 101 and below for Daniel.
So that means we want the price of oil to plummet.
Yes, you need a black swan.
I'm going to make a couple of
in the Middle
calls.
Maybe the Saudis can help you.
All right, guys, we're going to wrap this up. It is the 4th of July edition. That's why you saw in the background here. That is actually red, white, and blue lighting, even though that looks like gray. But it is actually white light on gray foam. Gray foam. Anyway, so I'm proud to be an American. All right, no, we're going to sing that whole thing. No, we're not.
Nope. Nope. That was a big fat nacho. Nope.
This is not your turn to be doing that. All right. Hey, guys, have a great weekend. Arrive alive. Be careful. not because of what you're doing, but because of what these crazy drivers, especially here in Memphis, do.
And don't lose any fingers or toes
say,
if you're popping
all
fireworks.
your
Oh yeah,
fingers.
yeah. Point your fireworks correctly and anything else. All right, I'll talk to you guys next week. Bye.
Bye.